Based on the historical data and forecast, Bitcoin shows a generally upward trend with some volatility. The RSI consistently remains above 40, suggesting a bullish sentiment, but rarely exceeding 65, indicating limited overbought conditions. The Bollinger Bands show the price fluctuating within a defined range, with the recent price approaching the upper band, suggesting potential resistance. Considering these factors, I propose a portfolio combining a trend-following strategy with RSI and Bollinger Band signals. We will implement a long position when the RSI dips below 50 and the price touches the lower Bollinger Band, aiming to capitalize on short-term pullbacks within the broader uptrend. Specifically, on June 19, 2025, the forecast price is $104,700, and the RSI is predicted to be below 50. The lower Bollinger Band is at $101,600. Therefore, I recommend entering a long position at $101,600. The stop loss should be set slightly below the lower Bollinger Band at $101,300 to mitigate potential losses if the downward trend persists. The initial target price will be the upper Bollinger Band, which is $109,800. If the price reaches this target, we will consider moving the stop loss to break-even and potentially setting a second target at $110,500, depending on the market conditions. This strategy balances risk and reward by utilizing multiple technical indicators to confirm entry and exit points. Based on the historical data and forecast, Ethereum shows a generally upward trend, although with some volatility. The RSI fluctuating around 50 indicates neither strong overbought nor oversold conditions recently. The Bollinger Bands suggest that the price has been trading within a range, with recent movement towards the upper band. Considering the support at $2,510 and resistance at $2,570, I propose a strategy combining RSI and Bollinger Bands. We will initiate a long position when the RSI dips below 50 and the price touches the lower Bollinger Band, indicating a potential oversold condition. Specifically, I recommend entering a long position at $2,380. Given the recent upward trend and the forecast prices hovering around $2,540 to $2,580, a conservative stop loss should be placed slightly below the support level at $2,350. The initial target price will be set at $2,570, aligning with the recent resistance. If the price breaks through this resistance, we can adjust the target price to $2,600. This strategy aims to capitalize on the upward momentum while mitigating risk through strategic stop-loss placement. Based on the historical data and forecast, XRP exhibits a slightly upward trend, bouncing around the support price of $2.14. The RSI consistently fluctuates between 42 and 55, indicating neither extreme overbought nor oversold conditions. However, the recent dip and the forecast prices hovering around $2.13 to $2.16 suggest a potential entry point. Considering the Bollinger Bands, the price has been nearing the lower band, indicating a potential rebound. Therefore, I recommend a long position with an entry price of $2.13. To manage risk, set a stop loss at $2.09, just below the lower Bollinger Band. A reasonable target price would be $2.23, aligning with the recent resistance level. To maximize returns, I propose a layered exit strategy. Initially, take profit at $2.18 to secure a small gain. Then, if the price continues to rise, move the stop loss to break even at $2.13 and let the position run with a target price of $2.23. This approach allows us to capitalize on the upward momentum while protecting against potential reversals. The RSI readings suggest caution, but the confluence of support, Bollinger Bands, and forecast data provides a favorable risk-reward ratio for this trade. This strategy combines elements of trend following, momentum trading, and risk management to achieve high returns. Based on the historical data and forecast, BNB shows a slight downward trend. The RSI consistently remains below 55, indicating a generally oversold condition. The forecast predicts a continued decline, with prices hovering around $636 to $641. Considering the support level at $639 and the decreasing Bollinger Bands, a short selling strategy is recommended. The entry price should be $644, with a stop loss set at $648 to protect against a potential upward reversal. A conservative target price of $636 is set, aiming to capitalize on the predicted downward movement. To refine this strategy, we will incorporate RSI signals. If the RSI falls below 20, it suggests an extremely oversold condition, signaling a potential bounce. However, given the overall bearish outlook, we will maintain a short position. If the RSI reaches 80, it indicates an overbought condition, suggesting a possible reversal, but we will hold the position until the target price of $636 is reached. The combination of these indicators, along with the support and resistance levels, creates a robust strategy for high returns in the current market conditions. Based on the historical data and forecast, Solana has shown volatility with a recent downtrend, but the RSI consistently indicates oversold conditions, hovering around 40. The support price remains stable at $144, while the resistance fluctuates. Considering the forecast for the next week predicts a sideways movement around $146, I recommend a contrarian strategy focusing on short-term gains. We will initiate a long position at $144, placing a stop loss at $141 to limit potential losses. Our target price will be $152, aiming to capitalize on a potential bounce from the oversold RSI and a stable support level. To enhance the strategy, we'll incorporate Bollinger Bands. When the price touches the bottom band around $141, it signals a potential buying opportunity. If the price reaches $146, we will consider exiting the position and waiting for a better entry point. We will use the RSI as a filter, only entering long positions when the RSI is below 40. This combined approach, with an entry price of $144, a stop loss of $141, and a target price of $152, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, TRON shows a slight upward trend with periods of consolidation. The RSI fluctuates between 47.8 and 67.5, indicating neither strong overbought nor oversold conditions consistently. The Bollinger Bands have been narrowing recently, suggesting a period of low volatility, and the price is currently near the middle band. Considering the support at $0.27 and resistance around $0.274, a conservative strategy is warranted. I recommend a long position entry at $0.275, coinciding with the initial forecast price. A stop loss should be placed just below the support level at $0.268 to protect against a potential downside reversal. The initial target price should be set at $0.285, just below the recent resistance level, aiming for a reasonable profit. To refine the strategy, we can incorporate the RSI and Bollinger Band signals. If the RSI dips below 40, indicating an oversold condition, consider an additional long entry at $0.27. Conversely, if the price touches the bottom Bollinger Band, it could also signal a buying opportunity. For the forecast period, if the price consistently stays above the upper Bollinger Band, raise the target price to $0.284. However, if the price falls below the center band for 2 consecutive days, consider exiting the position to minimize losses. This dynamic approach allows for adjustments based on real-time market conditions, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, Dogecoin shows a downtrend with consistent trading within a narrow range between $0.17 and $0.179. The recent forecast indicates a further decline, potentially reaching $0.164. Considering the RSI consistently below 50, with values frequently approaching the oversold level of 20, a contrarian strategy focusing on short-term bounces is advisable. The Bollinger Bands confirm this, with the price often touching the lower band, suggesting potential for a temporary rebound before resuming the downtrend. Therefore, I recommend a strategy involving short-selling opportunities when the price touches the lower Bollinger Band. Specifically, enter a short position at $0.167, placing a stop loss at $0.174 to limit potential losses if the price unexpectedly rebounds. Set a target price at $0.164, aiming to capitalize on the anticipated downward trend. This strategy combines RSI oversold signals with Bollinger Band confirmation for a high probability, short-term trade. Based on the historical data and forecast, Cardano exhibits a downtrend, supported by the declining forecast prices and consistently trading near the lower Bollinger Band. The RSI consistently remains below the oversold level of 30, indicating persistent selling pressure. Given this bearish outlook, I recommend a short position. Entry price should be set at $0.598. A stop loss should be placed above the upper Bollinger Band at $0.596 to protect against unexpected price reversals. The initial target price is set at $0.574, aligning with the forecast price for June 25, 2025. To refine this strategy, we can implement a tiered target approach. After reaching the initial target of $0.574, we can move the stop loss to the entry price of $0.598, securing profits while allowing for potential further downside. The final target is set at the support level of $0.559. This multi-stage approach allows us to maximize potential gains while mitigating risk by dynamically adjusting the stop loss based on price action. This strategy combines technical indicators, forecast data, and support/resistance levels to create a high-probability short trade. Based on the historical data and forecast, SUI exhibits a downtrend. The price has been consistently decreasing over the past 2 weeks, and the forecast for the next week projects further decline. The RSI consistently stays below 50, indicating a bearish momentum. The Bollinger Bands are narrowing, suggesting decreasing volatility. Considering these factors, I recommend a short position strategy. We will enter a short position at $2.83, placing a stop-loss order at $2.95 to limit potential losses if the price unexpectedly reverses. The initial target price will be $2.64, based on the forecast. To refine this strategy, we will incorporate the RSI and Bollinger Bands indicators. If the RSI drops below 30, indicating an oversold condition, we will hold the short position, anticipating a potential bounce. Conversely, if the price touches the bottom of the Bollinger Bands, which is currently at $2.78, we will consider tightening the stop loss to $2.85. If the price reaches the target of $2.64, we will take profit and reassess the market conditions. This combined strategy aims to maximize returns while managing risk effectively in the current bearish environment. Based on the historical data and forecast, Bitcoin Cash demonstrates a clear upward trend. The price has consistently tested the 438 support level and approached the 465 resistance. The RSI values, while fluctuating, have generally been trending upwards, indicating increasing bullish momentum. The Bollinger Bands have been widening, suggesting increased volatility and potential for further price movement. Considering this, I recommend a long position strategy. We will enter a long position at $454. The stop loss will be set at $438, just below the established support level, to protect against a potential reversal. The initial target price will be $465, aligning with the resistance level. To optimize returns, we'll implement a dynamic target price strategy. Once the price reaches $465, we will move the stop loss to the entry price of $454, securing profits and limiting potential losses. Subsequently, we will set a new target price of $483 based on the forecast data. This strategy combines the strength of trend following with risk management techniques, capitalizing on the bullish momentum while protecting against downside risk. The RSI is not in the oversold area, so we will not use it for entry. The Bollinger Bands indicate that the price is likely to continue to rise, so we will use it to set the target price. Based on the historical data and forecast, Bittensor shows a mixed trend with periods of both upward and downward movement. The RSI consistently remains below the 50 mark, indicating a generally oversold condition. The forecast for the next week predicts price fluctuations around $360, suggesting continued volatility. Considering the support price of $350 and the recent dips, a strategy focusing on short-term gains with tight stop losses is advisable. I recommend a long position entry at $355, placing a stop loss at $348 to limit potential losses. A target price of $364 can be set to capture a reasonable profit within the predicted range. To refine this strategy, we will incorporate the Bollinger Bands. The price has been trading within the lower band for some time, indicating potential for a bounce. Combining this with the RSI readings, a long position at $360, with a stop loss at $354 and a target price of $364, offers a balanced approach. This strategy leverages the oversold condition and the potential for a rebound within the Bollinger Bands. The support price of $350 also acts as a safety net, reinforcing the stop-loss level. This portfolio combines the RSI and Bollinger Band strategies for increased efficiency. Based on the historical data and forecast, Pudgy Penguins demonstrates a sideways trend with periods of volatility. The RSI consistently remains between 37.2 and 56.4, indicating neither strong bullish nor bearish momentum. The Bollinger Bands show that the price has been fluctuating within a range, recently approaching the lower band. The forecast for the next week suggests a continued sideways movement with prices hovering around $0.0094. Considering these factors, I recommend a cautious long strategy focusing on short-term price bounces near the support level. My strategy involves entering a long position when the RSI dips below 40 and the price touches the support level of $0.00923. The entry price will be $0.00923. To mitigate risk, I will set a stop-loss order at $0.0089, just below the lower Bollinger Band. The target price will be $0.0105, aiming for a conservative profit based on the recent resistance levels and the expected sideways movement. This strategy combines RSI and Bollinger Band signals to capitalize on short-term bounces while limiting potential losses. Based on the historical data and forecast, Eigenlayer demonstrates a volatile trend with periods of both upward and downward movement. The RSI fluctuates between 41.9 and 62.1, indicating moments of oversold and overbought conditions. Considering the recent downward trend and the forecast suggesting a continuation of this decline, I recommend a short position strategy. We will enter a short position at $1.26 with a stop loss at $1.27. The target price for this trade will be $1.21, aiming to capitalize on the predicted downward momentum. This strategy leverages the forecast data and the recent price action to minimize risk and maximize potential gains. To refine this strategy, we'll incorporate the Bollinger Bands. The price is currently near the bottom band, suggesting a potential bounce. However, the overall trend remains bearish. Therefore, we'll maintain the short position but adjust the stop loss. If the price reaches $1.24, we will exit the position and take a small profit. If the price continues to decline, we will hold the short position until it reaches $1.21, our initial target price. This combined RSI and Bollinger Bands approach offers a balanced strategy, capitalizing on both technical indicators to enhance our decision-making and maximize returns. Based on the historical data and forecast, JasmyCoin shows a downtrend. The price has been fluctuating within a narrow range, bounded by a support price of $0.0124 and a resistance price of $0.0134. The RSI consistently hovers between 31.5 and 48.3, indicating a mixed sentiment but generally leaning towards oversold conditions. The Bollinger Bands show the price has been approaching the lower band, suggesting potential for a bounce, but the forecast predicts a continued downward trend towards $0.0121. Considering these factors, I recommend a short-term contrarian strategy focusing on quick profits within the established range. My strategy will be a combination of RSI and Bollinger Bands. The entry price will be $0.0124, coinciding with the support level and the lower Bollinger Band. The stop loss will be set at $0.0121, just below the forecast price, to limit potential losses. The target price will be $0.013, aiming for a quick profit as the price bounces off the support and approaches the middle of the Bollinger Bands. This strategy aims to capitalize on short-term volatility within the defined range. This is a high-risk, high-reward strategy suitable for experienced traders. Based on the historical data and forecast, Injective shows a fluctuating trend with a recent consolidation phase. The price has been oscillating within a support of $10.3 and resistance of $12.3. The RSI indicates that the asset is currently in a neutral range, fluctuating between 40 and 60, suggesting neither strong overbought nor oversold conditions. The Bollinger Bands show that the price is nearing the lower band, indicating a potential for a slight bounce. Considering this, I propose a moderately bullish strategy. We will enter a long position at $11.4, placing a stop loss at $10.5 to protect against a potential downside breakout. The initial target price will be $11.8, aligning with the resistance level. To refine this strategy, we will incorporate a dynamic adjustment based on the RSI and Bollinger Bands. If the price reaches the $11.8 target and the RSI exceeds 60, indicating an overbought condition, we will take partial profits. Simultaneously, if the price approaches the lower Bollinger Band, we will consider adding to our position, lowering the average entry price. We can set a second target at $12.3, the resistance level, and adjust the stop loss upwards as the price moves in our favor. This adaptive approach aims to maximize returns while mitigating risk, capitalizing on short-term fluctuations and potential trend reversals. Based on the historical data and forecast, Ondo shows a downtrend with increasing volatility. The price has been fluctuating between a support of $0.775 and a resistance of $0.933. The RSI indicates oversold conditions with values frequently below 40, suggesting potential for a bounce. However, the forecast predicts a continued decline, with prices ranging from $0.757 to $0.731. The Bollinger Bands are widening, indicating increased price volatility and uncertainty. Considering these factors, I propose a contrarian strategy focusing on short-term opportunities within the downtrend. My investment strategy involves a series of short trades capitalizing on temporary bounces while managing downside risk. I recommend initiating a short position at $0.814. Given the RSI is around 39.9, it suggests a slight overbought condition, increasing the probability of a pullback. Place a stop-loss order at $0.836, just above the recent high, to limit potential losses if the price continues to rise. Set a target price at $0.775, aligning with the established support level. If the price reaches $0.775, consider covering the short position and waiting for the next opportunity. If the forecast continues to decline, I suggest initiating another short position at $0.757 with a stop loss at $0.776 and a target price at $0.731. This approach balances the potential for short-term gains with a robust risk management framework. Based on the historical data and forecast, Worldcoin has shown a downtrend recently. The price has been fluctuating within a range, testing the support level of $0.91 and the resistance level of $1. The RSI consistently remains below 50, indicating a bearish momentum. The forecast for the next week predicts a continued decline, with prices dropping to $0.897. Considering these factors, a short position strategy is recommended. We will enter a short position at $0.948, placing a stop-loss order at $0.925 to limit potential losses. The target price for this trade is set at $0.897, aligning with the forecast and providing a reasonable profit margin. To refine this strategy, we'll incorporate the Bollinger Bands. When the price touches the lower band, it suggests an oversold condition, potentially signaling a temporary bounce. However, given the overall downtrend, we'll prioritize the short position. The combined strategy involves entering a short position at $0.948, setting a stop-loss at $0.925, and targeting $0.897. This approach leverages both the RSI and Bollinger Bands to maximize potential returns while managing risk effectively. The portfolio will be 70% short position, 20% cash, and 10% for risk management. Based on the historical data and forecast, Jito demonstrates an overall upward trend. The recent price action has tested the support level of $2.21, with the RSI fluctuating between 41.8 and 65.2, indicating periods of both oversold and overbought conditions. The Bollinger Bands have widened, suggesting increased volatility. Considering the forecast for the next week, which predicts prices ranging from $2.17 to $2.46, I recommend a long position strategy. Specifically, enter a long position at $2.17. Set a stop-loss order at $2.10 to mitigate potential losses if the price reverses. Aim for a target price of $2.40, capitalizing on the predicted upward momentum. To refine this strategy, we'll incorporate the RSI and Bollinger Bands. If the RSI dips below 20, indicating an oversold condition, consider entering a long position at the prevailing price. Place a stop-loss just below the lower Bollinger Band. Conversely, if the RSI exceeds 80, signaling an overbought condition, consider taking profits or entering a short position. Combining these indicators with the overall trend and forecast, the most efficient portfolio would involve entering a long position at $2.17, setting a stop-loss at $2.10, and targeting $2.40. This strategy balances trend following with risk management and reactive adjustments based on RSI and Bollinger Band signals. Based on the historical data and forecast, SAY demonstrates a downtrend. The price has been fluctuating within a range bounded by a support price of 0.166 and a resistance price of 0.184. The RSI consistently remains below 50, indicating a bearish sentiment, with recent readings around 35 to 40, suggesting the asset is not severely oversold. The Bollinger Bands show that the price has been nearing the lower band, indicating potential for a short-term bounce, but the forecast predicts continued downward movement, with prices falling to 0.169. Therefore, I recommend a short position strategy with an entry price of $0.171, a stop-loss price of $0.176, and a target price of $0.166. To optimize the portfolio, I will combine the RSI and Bollinger Band strategies. If the RSI falls below 30, which indicates an oversold condition, we will enter a long position at $0.166, set a stop-loss at $0.166 below the support price, and target a price of $0.176. Conversely, if the price touches the upper Bollinger Band, we will enter a short position at $0.171, set a stop-loss at $0.176, and target a price of $0.166. The forecast data suggests a continued downtrend, so prioritizing the short position is crucial, with the combined strategy providing flexibility based on the RSI and Bollinger Band signals. Based on the historical data and forecast, Kaia shows a clear upward trend. The price has consistently been bouncing off the support level of $0.107, and the RSI has generally been trending upward, although it has recently entered overbought territory. The Bollinger Bands have been expanding, indicating increased volatility and potential for further price movement. Considering these factors, I recommend a long position strategy. We will enter a long position at $0.168. The stop-loss should be set just below the support level at $0.107 to protect against a potential reversal. The initial target price will be $0.181, aligning with the forecast for June 19, 2025. To maximize potential returns, we will implement a dynamic target price strategy based on the RSI and Bollinger Bands. If the RSI reaches 80, we will partially take profits at $0.183, securing some gains. Subsequently, we will move the stop-loss to break even at $0.168. If the price continues to rise and the RSI approaches overbought territory again, we will consider taking further profits at $0.191. This approach combines the momentum from the upward trend, the support of the $0.107 level, and the signals from the RSI and Bollinger Bands to optimize both risk management and potential returns.